So guys, I'm just checking if you are currently live. As you can see guys, this is my channel. Just go and check the live sessions. So okay, so guys, we are actually live. um we are actually live, so I'm just gonna close this right here, move back. So let me remove everything. So guys, you don't know what happened just now, because I was recording a live session, but after I thought I was finished, I never recorded. So a whole 40 minutes I have been just talking. So guys, without wasting your time, this week gold is moving fast. This week gold's gonna move fast. So if you are ready for this opportunity, I want you guys to like and subscribe and tell me if you are bullish on gold or if you are still a seller. And if you are a seller, please elaborate more why you think gold is going to move to the downside. So in this live session, I'm going to break down key levels and trade setups that could make or break my trading week. So what I mean about that, because there's a lot of potential coming this week on gold. So let me just quickly give you a broader picture on gold. As we can see, that gold is currently at an all-time high. So what do we expect when the market is at all times high? You have to expect continue follow bullish trend. You have to follow the trend, guys. Don't look for selling opportunities unless you're a scalper or you get clear confirmation that the market is selling. Then you can take your trade. But for me, I'm a buyer. I'm going to continue to buy gold until I get a clear signal that the market is reversing. So as we can see, I'm just going to analyze gold on the 4-hour chart. As we can see, the market is clearly bullish, creating high highs, lower lows, high highs, and lower lows. But before I just want to say, guys, excuse me for the way I'm talking. I currently have a flu, so you will currently see me also sniffing. So yeah, that's it. Let's look at gold. Last week, I had a live session on YouTube where I took a trade on my live session. So you guys can check that video out. So as we can see, gold is bullish, creating higher highs and higher lows. So we had this clear break of structure to the upside. Then the market pushed higher, and then the market retraced, giving us another clear break of structure to the upside. Now, why is this a clear break of structure? Why is this a clear break of structure? As we can see, if we have to look at this candle is clearly, it's a big candle which broke out of this consolidation or structure right here and closed above it. So we had this push to the upside, then the market retraced, giving us this 4-hour swing low, which is a strong swing low, giving us this strong swing low. Let me quickly annotate it. Clear swing low, and then after we break this structure, we had a clear swing, and this is our swing high right here. That's our swing high right there. which is a weak swing high. Done. And after we had this clear break of structure to the upside, let me quickly. So we had this break of structure to the upside. The market gave us a retraced in a corrector form. As you can see, it gave us this push to the downside, creating a low, lower high, low, lower low, lower high, lower low, and then the market rejected from a key level. So I want to explain that key level also. As you can see, I want to go to the 1 hour time frame so that you can see it clearly. So let's go to the 1H time frame. So the key level is that I'm going to talk about is this one. I'm also going to explain why is it a key level on gold. As you can see, after this push started up creating this high, and then the market retraced. So the market retraced, giving us a low, and then it pushed a little bit high, and then we took out this low, sweeping this low right here. We sweep that low right there, and then we had to push to the upside. Then we created a consolidation. So we had this push to the upside. After we swept this previous low, we had to push to the upside, and the market consolidated, and then we break out of that consolidation, and then the market pushed down to the downside, and then we had this clear break of structure. Now the clear break of structure leaving this key area. Now this key area, key level right here, where the market rejected is, as you can see from this area right here, we had a strong push to the upside, and the market consolidated, and then we had another push to the upside. So most traders would have thought that this is our choke right there. That will be the choke, and this level right here, this area right here, would have been there OB or point of interest, what you guys want to call it. And what ended up happening is that the market took out, swept, it induced traders, so it swept that liquidity right there, and then we had to push to the upside, creating another consolidation, and then we had a clear break of structure, taking out the bigger structure. So let me just remove this. We had that sweep there, inducing traders. Let's just say inducement. So actually that's not an inducement. Let's just say it swept the liquidity right there, and then we had that clear break of structure. Now after we get the clear break of structure, the market giving us a corrective pullback. This is not a complex pullback, as you can see. It's giving us low, lower high, low, lower high, low, lower low, lower high, lower low. Then we took out that lower low, and then we also swept this another low right here. So we swept this. After we swept it, like, let's say, so we swept this low right here, and then the market tapped into this key level, it rejected, and then it took out this the previous lower high, and then the market pushed again to the downside, still in that PO and in that point of interest or key level. Then it rejected. As you can see, the market pushed a little bit high, and then it hit a resistance. I will show that level on, and it created a resistance level on the lower time frame right here. The market pushed higher, then it moved down, giving another push to that zone, then it pushed down, rejecting again from this key level. We had 3 rejections from this key level, so that the market indicated that it's willing to push higher. So the market was gave us clear signals that it's willing to push higher, because it rejected the first rejection, second rejection, which was a little bit deeper, but it didn't close below this key level, and then it rejected again, and then it pushed higher, breaking this resistance that was created on a lower time frame. So we had that area right there, and after this corrective pullback, you can see the market also gave us a trend line liquidity. It created this trend line liquidity, which means there was a lot of liquidity resting above this trend line. So I'm gonna mark that out as well. So I didn't took a trade from here. So I didn't take a trade from here. I took a trade actually from this level. If you have to go and watch that live session. After this, let me go to the 15-minute time frame so we can see the price action clear. So this is the key level. So what happened? So we had this clear break of structure to the upside. That's the first one. Then we tapped into this key level, reject multiple times from this key level, and then the market also created a internal resistance at this level. Let me show you guys. The market tapped into this key level, push higher, give us a push higher, and then it pushed lower. Another push, rejecting, creating that resistance level. Then it gave us another push to that zone, and then a pullback. Then another push into that zone again, and then another pushback. So and then it gave us another push to the upside, and then most people thought that was the breakout that's going to happen, and then they would have placed their trades right after that big candle right there and placed their stop loss right there, which end up happening. The market took them out. So the market swept this, inducing traders this liquidity right here, relatively equal lows. So this is relatively equal lows, not equal lows, and then the market swept that, and then we had this clear push to the upside, which give us this structure break, internal structure break. And then as we can see, that resistance level, this resistance level that was created just turned into a support. Why? We had a clear break of structure to the upside, breaking that zone, even breaking the previous high, that breaking that previous structure, giving us a clear break of structure, and then the market made a pullback into that resistance, which now turned into support, rejecting from that level, push a little bit higher, not closing, didn't close above this high right here. Then it pushed again down into that resistance, which now turned into support, giving us a rejecting candle. It rejected 3 times from that zone. It didn't close below that zone, and then the market pushed higher, giving us another break of structure. Also, that break of structure that just happened there was also at a key area. That was a resistance that was created. So we pushed above that zone, giving us a clear break of structure, and then the market retraced with this bearish candle, and then it rejected, pushed a little bit down, and then it rejected. After that rejection, that was my entry. After that rejection, that was my entry on the live chat, on the live session. And then, but that trade, the first trade that I took was only a scalping trade. So reason why is because of this area right here, this resistance that was created. So this was a quick scalp, which was also a great trade. How long did it take? It took me actually 45 minutes. 45 minutes, and then it hit TP, and then after it hit TP, we had this a pullback into this, and then I also took a trade, another trade, which I'm currently holding. I'm currently having still holding it. With it gave us these candles right here. I took a trade after this bullish candle was formed. That bullish candle closed. So I took a trade right there, placing my stop loss below that level, and then I'm currently still in the trade. So my next expectation on gold. So now gold is currently here. So what do we expect from that level? As we can see, if we have to look, we always have to look left. Once you always want to look left. As we can see, this area right here. This area right here. Let me just expand it so that you can see the price clearly. So as you can see, the market consolidated, pushed under that zone, then it gave us another pullback, and then it pushed up. After that, it tapped into this, and then it pushed a little bit higher, creating a resistance. Now we had the second time it came into that zone, it pushed higher, so it created this resistance, which now turned into a support level. And then after that, the market pushed below it, and then pushed another push to the upside, just a little bit above that zone, and then it break that zone. So, and after that, the market retested to almost tapped into that zone, and then it rejected. It came up back into that zone, which is now the resistance zone, and then it failed to break below above that, and then interest rate came. It pushed above that zone, and then it rejected back, not closing above that zone right there, that resistance zone, and then the market moved to the downside. So what do I expect on gold? I expect gold to push, give us a retracement to take out this week high right there. So my expectation is for gold to take out this week high right there. So I want a pullback on gold. I want to see a pullback on gold, and then so let me just move this area right from there. So I'm still in this trade. So this area right there, this is now where I want to see. So even if the market opens, I'm gonna close some trades, and then because I want to see gold give us a tracement to the downside to this area right here, because after we had the clear break of structure, as we can see. So this will be your 15-minute low, and hopefully around this area you're gonna have our 15-minute high, which is also a weak high, and then we can expect hopefully a retracement a little bit down, and then we can see take a buy trade to the upside. Typically I want to see it form here at this zone right here, but we won't enter blindly. I'm gonna see what gold's gonna do around this area right here. I want to see gold rejecting from this area, and then giving us a clear confirmation that it's going to push higher. But this week gold is going to push higher, so giving us a 1 to 7 risk reward, which is fantastic. So I want you guys, I told you in the beginning that I'm gonna give you clue, not a clue, I'm gonna tell you how gold likes to move. Let's go to the 1 hour time frame, or actually we can go to the 4-hour time frame. Let me check. Yeah, see the 4 hour, okay, actually the 1 hour time frame. So gold likes to move in 3 phases. I'm gonna explain, show you simple, very simple. It will create that low, lower high, lower low, lower high, lower low, lower high, lower low. After this low, you are gonna see gold reverse to the upside. Now this is your 3 phases, or let's just say 3 break of structures. That's gonna be your phase 1, and I'm gonna give you real examples. Phase 1, phase 2, it's gonna be a phase 2 right there, and then let me quickly pull it out. Phase 2 right there, and then if you know how to count levels, which is now phase 1, phase 2, phase 3, if you know how to count the levels, it's because this is how you can see you can counting levels. It's because if you see the market giving you a lower high, and then it breaks this previous low, that will be your phase 1. And then if the market give you another retracement and breaking this, that's gonna be your phase 2 right there. And then after phase 3 has been taken out, after this low has been taken out, giving us your phase 3, gold always likes to reverse. So this is gonna be vice versa. This is now for a downtrend, and then for uptrend it's gonna be the same. So let me give you real examples. So on this chart, I'm not going to go far, I'm just gonna show you right here. I'm gonna start here. So let's start. Where this push to the downside, market moved, giving us a return, and then the market break up, depth close below those, not close, but actually it swept that. This is your phase 1. That's your phase 1. Then with another push, then phase 2. But phase 2, this is your phase 2. Then with a push to the upside, and then we had phase 3. After phase 3, what did the market do? The market reversed to the upside. Now this is in a downtrend. You had this push, market push, giving us your phase 1, another push, phase 2, another push, phase 3, and then it moved to the upside. So let's talk about here. Push, reject, then it pulled down with your phase 1, phase 2, and then phase 3. But the market extended, giving us a phase 4, which wasn't even really. It's phase 1, phase 2, phase 3, and phase 1. Then the market reversed to the downside. Let's go here. Let's talk about here. Phase 1, phase 2, phase 3. After phase 3, the market moved to the upside. Let's talk about here. Phase 1, phase 2, phase 3. After phase 3, the market pushed higher. So now sometimes you have to understand the market will probably do phase 4, which is normal, where this push, phase 1, phase 2, phase 3. What did the market do after phase 3? The market reversed to the downside. I'm not going to go far, guys. As you can see, it's happening every single day or every single week. Phase 1, 2, 3. What happened after phase 3? Market pushed higher. So let's see more examples. Look at this show. But yeah, let's talk about more examples. I want to give you now I want to talk about the bigger structure. Here we go. Phase 1, phase 2, phase 3. Then after phase 3 we had a clear push to the downside. If you mark this one, let's try and mark this one. Let's mark this one. Let's see. With this push phase 1, let's see, phase 1. Now the market just here, the market just trickled down, not giving us a clear um, move to the downside. But after this, if you have to look phase, I won't consider this as a, because it's still, nope, yes, this is phase 2. But then after phase 2 we had phase 3, and after phase 3 we had a short push to the upside. So now if you can see, this is phase 1, phase 2, phase 3 didn't happen. So you will either get a phase 2, 2 phases, but most likely it's gonna be 3 phases. Most likely it's gonna be 3 phases. And if the market extends a little bit more, it's gonna give you 4 phases. Let's check this one. First phase, second phase, third phase. After the third phase, what happened? The market pushed higher. Let's check. But you have to understand that the market will most likely give you 3 phases. Now, what do I expect on gold right here after this analysis? So this is phase 1. Now I'm gonna mark it out. Phase 1. Then this gonna be, if you take this out, this weak high, if you take it out, that's gonna be phase 2. That's gonna be phase 2. And then let me quickly remove that. So that's gonna be, if we take out this high, that's gonna be phase 2. Then another pullback, and then we're gonna looking for phase 3, and then we expect market to drop, giving us another all-time high. So this is gonna be phase 3. So as you can see, there's currently good opportunities trading gold. After we have this break of structure to the upside, after breaking phase 2, then you can look for sell back into that, and then also target phase 3, taking out that high of phase 3, giving us a higher high. And then we can, after phase 3, you can expect a reversal. So hopefully taking all this out, pushing a little bit deeper, so this is gonna be a phase 1, phase 2, and phase 3, and then you can look for selling opportunities, but you have to get a clear confirmation. So this is what I'm gonna tell you now. Go back test it, guys. Go back test these 3 phases, because you will see it clearly in the market. So let's check on this one right here. Phase 1, phase 2, phase 3, and then the market just swept phase 3. After phase 3 we had that pushed, and then the market gives us hopefully a phase 4, and now we're expecting that move push to the upside. So guys, my take on gold is look for a retracement, and they just look for a retracement into this area, and then we're gonna buy gold, taking out phase 2. So if you like the analysis, like and subscribe this video, and also comment below if you are bullish on gold or if you are bearish on gold, and give me a reason why. why you are bullish and why are you bearish. So this is my take on gold. Buy. We're gonna buy gold. I'm going to buy gold. So guys, that's my take. Yeah, you can also go and check out my live sessions on gold just in the channel on this channel. So thank you guys for the 2 viewers, the 3 viewers, 5 viewers. One day I'm gonna inspire people with this YouTube channel. So yeah, I'm taking it one day at a time, guys. Taking it one day at a time.